Good morning. Thanks for tuning in and welcome to this special edition of the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. This is our rollover special where we decode the rollover trends for the month of November. So, Navneet, let's start off by seeing how markets are faring the first day of, a new series.
You know what? We were expecting a bit of a rebound, and that came about at least when the markets opened, owing to what the Asian markets were also doing this morning.
Yeah.
But we've given up majority of those gains. In fact, the opening came in at 12,100, so we're off nearly 50 points on Nifty. And remember, once again, 12,000 remains a very, very crucial mark for the index because there is a lot of concentration on that particular strike, be it on the weekly basis or monthly basis. Sensex is just up about 80 points. It was trading above the mark of 41,000 for a while. Bank Nifty has been outperforming today. In fact, Bank Nifty sustained the gains, the opening gains so far. And of course, 31,000 will be a key level to be watched out. Pull up the broader markets, which have outperformed so far in the month of January. Last 2 days were not so good, but not really. It's a mixed session now. Mid cap is down 0.25% and small cap seeing gains of about 0.25%. Volatility is back in action. It's the D-Day tomorrow. You've got the union budget, a rare Saturday when the markets will also be open, so you're free to trade, and volatility ahead of that is up about 2%. I just want to highlight key levels that you should watch out now, considering tomorrow is a very, very important day. For Nifty, on the higher side, the resistance will come in at the 50 DMA, which is placed somewhere about 12,130. So, of course, in the morning, we were looking for that mark. We crossed the 12,100, but we could not touch the 50 DMA. If we breach the 12,000 mark, which is very important, as I mentioned, there is a lot of open interest concentration on that strike. If we breach, then your 100 DMA becomes extremely important, which is at about 11,800. While on the Bank Nifty, which has been underperforming Nifty for the last two series, and of course, Bank Nifty has been trading way, way below its 50 DMA for the longest time. 100 DMA has been defended so far with the weakness that we've seen in last few sessions. So 3450 is something you should watch out first on the downside for Nifty Bank, and then of course 30,000 will remain as a very crucial mark. Having said that, I just want to pull up the options picture as well for this weekly expiry, which is on the 6th of February. In terms of distribution, there you go. 12,200, 300 call strikes are the one that you should watch out on the upside. As I mentioned, if you cross the 50 DMA, then 12,300 will become important. On the downside, maximum open interest concentration is at the 12,000 put. And so far, in terms of change, 11,800, that's the 100 DMA. I just highlighted that. That put strike is witnessing a lot of writing. Maybe the put writers are quite sure that Nifty may not go through that level, while on the call side, you are seeing open interest addition at 100, 200, as well as 300 strike. But Agam, what about individual stocks?
Well, let's pull that up because today we're going to have largely stocks which are seeing an increase in open interest. So let's see where there is a lot of traction today and a lot of gains, perhaps. So we have Bharat Electronics, which is under quite a bit of pressure right now. It's down 8%. It's likely because of the weak set of earnings it's come out with. Coal India is looking at some profit taking after a bout of some amount of gains coming in. ONGC is reacting, as is Motherson Sumi, but towards the negative. So we have Motherson Sumi lose out on the 140 mark. It's down 2%. There's shorts building in there as well, as we have seen in case of Oil India too. Well, so these are just some of those stocks which are seeing an increase in open interest. I'm not going to talk about stocks which are seeing unwinding because it is a new series, as I mentioned. But on that note, let's get in our expert for today. We have Amit Shah, BOB Capital Markets, who's joining us to take us through what we can expect in the upcoming series. Amit, good morning. Thanks for joining us. Let's start off with how you are seeing rollovers pan out for the benchmarks and what's the way forward here.
Yeah, good morning, Agam and Navneet. So, we had a poor start in terms of the index where the base in the last 6 months has been gradually decreasing. So, to start with the Feb series, we are having a less participation where the open interest on the Nifty is just around 1 crore 8 lakh shares. Compared to the previous series, what we had seen was around 1 crore 23 lakh odd shares. As Navneet likely highlighted, that 12,000 is a critical support on the market. We have seen the put writers remaining quite strong around those levels, and the call writers have gradually moved lower from 12,500 to 12,200. So 12,200 will be acted as a very stiff resistance for the market, and the moment it violates 12,000, the strongest put writers which are holding at this moment, then definitely even on a technical basis, the support is seen around 11,800 odd mark. That's the last 3 months of trading range where 11,800 has been respected. So that will be as a very key support for the market to hold on. So if you look at the overall January month, Nifty has remained negative around 0.7 odd basis point and has struggled to sustain about 12,200 mark. In the last 4 days, 5 days of the expiry week, since the time Nifty has corrected from 12,430 odd levels, we have seen liquidation of long positions in the current month series, that was the January month series, and approximately 11 odd lakh odd shares were added to the February series on the short side. So that shows that around 10 lakh, 12 lakh shares which had been added in the last week of the expiry, that has added some pressure after violating the 12,200.
And that is on the short side.
That's on the short side. Yeah.
Okay, Amit, in absolute terms, the rollovers for both Nifty Bank has been lower, and we've been pretty light. I think series after series, we've been entering new series at a very light note. Tomorrow being the budget day, in terms of rollovers for Nifty Bank, which has been an underperformer for the last 2 series, anything which is standing out? I know private banks were the one which are the key heavyweights on that index. They were the biggest laggards.
Yeah, so in fact, among all the sectors, the weakest rollover has been in the banking space. The index has corrected over 4%, and even on the open interest front, in the last week of the expiry, around 4.5 lakh shares were added on the short side directly for the February month contract. So that shows the overall index has been struggling, and it will, in my view, it will continue to underperform the broader indices. Across the space, PSU banks as well as on the private banking space, we have seen very poor rollovers. The very few counters like ICICI Bank and Kotak Bank has slightly showed something on the positive side, but most of the bankings are featuring on the negative side of the rolls.
Okay, but of course, Amit, majority of the IT companies have announced their earnings, and now we're just left with numbers essentially on the technical side. What's the view here, considering you track this one very closely?
Yeah. So IT, though, it has seen some good rollovers, but the overall participation on the open interest side, it's quite muted. Around 5,000 shares, we are starting with that base for the February series. That was a similar kind of a base when we started the January series. Though in terms of price action, we have seen outperformance overall compared to Nifty and Bank Nifty, where the index has gained over 4% odd. In my view, the follow-up buying participation is lacking in the overall IT space. Very few counters like NIT Tech, we have seen some strong outperformance, but the other stocks have still not confirmed. So I believe it will remain a neutral to positive bias in the coming time, but yeah, it can see some outperformance over Nifty, Bank Nifty.
Okay, so the outperformance in Nifty IT can continue. Just to sum up the 3 major indices rollover, for Nifty Bank, rollovers this time around have been below their average 3-month rollover that we have seen. And for Nifty IT, which outperformed, the index was up about 4%, the rollovers are just looking muted. But what stood out, Amit, was the broader markets. Mid-cap index was up 8%. Hence, in light of that, do you think the market-wide rollovers look better?
Yeah, definitely. So if you look at the overall stock-specific rollovers, there were positive bias. So there are a lot of divergences what we have seen overall compared to the broader indices and compared to the overall stocks, compared to a sector versus a stocks. So Nifty and Bank Nifty, as we have seen, that it has been on the negative side. But yes, if you look at the overall market-wide rollovers, the open interest has been close to around 406 crore shares compared to the previous base of 391 odd crore shares. If you look at the overall contribution, the contribution this time has come from large cap and the mid cap space, mainly on the large cap side, where the large cap open interest has increased from 257 to 280 odd crore shares.
Sure.
Even if you look at the advance to decline ratio, it has improved compared to what we had seen in the month of December, where 91 shares had advanced against 53 odd shares which have declined in the January series.
Right.
So overall, looking at the advanced decline and plus the rise in the open interest, overall the stock specific, we are seeing some positive side of rollovers.
All right. So Amit, very quickly, if you could give us an idea on sectors that look good and sectors that may not look so strong.
Yeah. So overall, I believe banking will remain under pressure, and that's the major contributor to the Nifty index. So on the positive side of it, the sectors which I believe can see some outperformance in the February month are cement, consumer goods, and NBFCs. Overall, on the negative side, I believe banking, both private and PSU banks, will have some negative outlook. Metals has completely been a laggard for the January series, though we saw some kind of an action in the early start, and a selective space on the oil and gas, especially leaving aside the guest counters like MGL, IGL, those can outperform, but the heavyweights like Reliance and ONGC have seen a weaker side of the rollovers. So I believe these three sectors will continue to underperform, and there is a positive to neutral bias with IT and pharma space, which I believe selective stocks can see some outperformance.
Okay, so those are the view coming in on a couple of sectors: neutral on auto, pharma, technology, weak on banks, metals, oil and gas, and strong rollovers coming in for cement. We've seen cement stocks bouncing back in the month of January from Shree Cement, ACC, Ambuja, Ramco, all of them were up and about. But before we start discussing individual stock, why don't you tell us your top picks then for the February series?
So within the sectors which I discussed, as you likely mentioned, the cement space, we have seen some good momentum. So in the cement space, I would pick Shree Cement, where I believe the stock is in a very much structural upside. Can see a good still 5 to 8% on the upside in near term. The other recommendation which I have been recommending from quite long is buying on Voltas. I still remain quite with a high conviction where the stock target can be close to around 800 to 850 odd. The stock has seen a very good rise in the open interest in the last couple of weeks as we move to the February series. In the NBFC space, I would choose Chola Finance and Ujjivan Finance. Both these counters, Ujjivan in fact after long, I think more than 6-7 months, it has seen a good traction of open interest. Chola has been an outperformer in the overall space, and it will continue to see some outperformance. And the last, it was a difficult choice between Britannia or Dabur, but I choose Britannia over Dabur for the February series. Though both the counters have seen a good rollovers, but I feel Britannia can be a better choice.
Okay, and Dabur yesterday was weak, I guess, opposed the numbers. Okay, what about the stocks that you're bearish on?
Well, so if you look at the overall metal and mining space, I believe Vedanta and Coal India can see some negative performance from here on. Both the stocks, it has been making a lower top, lower bottom formation steadily and has been violating the key short-term supports on weekly to monthly time frames.
Yeah.
Apart from that, in the banking space, though IndusInd Bank has seen some kind of pullback today, but overall, if you look at the structure, the stock has been steadily making a lower top, lower bottom formation. So, though there can be limited downside, but overall, it can see some underperformance compared to the other private banking space. There are multiple resistances on the upside, so it will be very stiff on the upside where it can hold on for a very long period of time. So, every upside can be utilized to exit the trades. In the PSU banking space, I believe Canara Bank and PNB, but PNB can see some relatively underperformance over Canara Bank. So PNB would be my another negative pick. And lastly, on the capital goods side, I believe BHAIL, the stock has been steadily underperforming. It will continue to underperform in the overall capital goods space.
Okay. Well, from there on, let's talk about a handful of stocks that have done quite well, and on the opposing end, seen a lot of weakness in the December series. One of them is Tata Global Beverages, which actually made a life high through the course of December, and it's just going from strength to strength. And of course, it's up as much as 22% in the January series. But Amit, what's the way forward here? The momentum clearly is on the upside, but how is the risk-reward ratio at this point in time?
Though the momentum had been quite steep, the biasness remains very much positive.
Yeah.
If you look at the stock, from the way it has moved from 300 to almost 390 odd levels, in the last couple of weeks, it has managed to consolidate between 380 to 400 odd band. So that makes a good supportive around 375 to 380 odd level. If someone wants to trade, can definitely trade with 375 as a stop loss. And on the upside, 430 to 450 looks optimistic on this stock.
Okay, that's Tata Global Beverages. I just want to address today's buzzing stock, and that's Kotak Mahindra Bank. And of course, as we mentioned, the private banks did not do much in the January series. We had earnings coming from most of them, and one key takeaway was that slippages appear to be on the higher side for majority of these private banks. And today's respite, of course, it has come in after they've struck a peace deal with Reserve Bank of India. They're supposed to bring down the promoter shareholding by almost 4% to 26%, and for that, they have nearly 6 months of time. But Amit, today's reaction is more on fundamental development, but with the move that we are seeing on charts, do you think the stock can recover sharply now from here? It's crossed the simple 50 DMA with today's move.
So if you look at the overall structure, the stock is in a very much positive trend. Though the last month it had violated the key support of 1620, but it has reversed from those levels. So the more it holds above 1620 odd mark, I believe the biasness will continue to remain on the positive side. A break above 1700, 1710 can add some more fuel to the momentum, where on the upside 1780, 1800 levels can again be tested.
Okay, and let's take up perhaps the city gas distribution companies. Amit, actually, this one is an open one for you. You can talk about IGL or MGL for that matter. MGL specifically has caught up in terms of fundamental valuations, but you know, if I were to compare both these, where would your priorities lie at this point in time?
Well, purely on the F&O play, I would be more comfortable to buy MGL at this level.
Okay.
Today, the stock is down by around 3% odd, but I would consider this as a buying opportunity.
Right.
If you look at the overall structure, the stock has multiple supports on the downside, where immediate is now being at 1175 odd. So I would trade with that as a stop loss, and the more it sustains about 1230 odd mark, I believe it is likely to head towards its all-time high level, which is close to around 1310.
Okay, that's the city gas distribution companies which continue to outperform. In fact, this month itself, you had Credit Suisse also initiating coverage on this space, and post that we've seen some strong gains. But Amit, the top F&O stock, I guess, for the series was Escorts, which gained about nearly 30%. We had the numbers coming this week. Numbers were also supportive of the stock price movement. Yesterday, it touched 52-week high. Let's say if someone had rolled over their long positions on Escorts, what would you advise now?
So though, if you look at the price action, the open interest on the Escorts for the start of the Feb series is still lower compared to the previous month. It is starting with a base of around 52 lakhs compared to 55 lakhs the previous series. So though the price action has been quite steep, but it has not been confirming with the open interest increase or the rollovers seen for the Feb series. Looking at purely on the chart perspective, technical perspective, someone is holding. I would advise a trailing stop loss of 790. That's where the momentum will dry out if it violates that. And if it continues to hold above 790, I believe it can see further upside towards 830 to 850 levels.
Okay, well, you know, before we will come in and conclude the show, let's just take a couple of queries, because we do have some interesting ones. And I'm going to start off with Reliance Industries, because we have Harshvardhan, who has a 1460 call of Reliance Industries at 49. He wants a view on this one. It's currently at 1425, so it's a tad away from it going in the money. And of course, we all know that Reliance has been quite weak of late, specifically in the last 2 or 3 or 4 sessions. Amit, what would your advice be on the 1460 call?
Yeah, as you rightly mentioned, that looks quite out of the money at this point of time. The stock has, though, immediate resistance at 1460 odd. So overall, if you look at the stock, the moment it has violated the support of 1500, it has been making a lower top, lower bottom formation. So I would not be a buyer into any kind of a positive trades into Reliance Industries. I would wait for the time consolidation to end. So I would recommend to exit, because still there is a lot of time value which is pending. You are getting some heavy premium because of the budget which is going to come up tomorrow. Yeah. So the IVs are higher. Utilize these IVs and exit the wrong trades.
Okay, before we get to Amit's tactical budget trade for tomorrow, I just want to take some more queries from, this one's coming from YRP, and HUL comes out with its numbers tomorrow, a big number from the FMCG space. Remember, HUL is considered as a barometer to gauge the consumer sentiment, and let's see the volume growth number, how that pans out. But YRP wants to know, he wants a view on 2060 call strike of HUL. Amit, if you could help with that.
Yeah. Can buy, considering the overall structure. The stock is showing a positive bias. On the downside, I would recommend a stop loss of 2030 to hold to a 2060 strike call option.
Okay. Well, of course, the Prime Minister is about to give us a comment, and let's listen and let's go on across to see what he's saying.
नमस्कार सभी साथियों को 2020 का ये प्रथम सत्र है। इस दशक का भी यह प्रथम सत्र है। हम सबका प्रयास रहना चाहिए कि इस सत्र में इस दशक के उज्जवल भविष्य के लिए मजबूत नींव डालने वाला ये सत्र बना रहे। आज आदरणीय राष्ट्रपति जी का उद्बोधन होगा और कल इस नव वर्ष का बजट भी प्रस्तुत किया जाएगा। ये सत्र अधिकतम आर्थिक विषयों पर चर्चा केंद्रित रहे। वैश्विक आर्थिक स्थितियों के संदर्भ में भारत किस प्रकार से इन परिस्थितियों का फायदा उठा सकता है, अपनी आर्थिक गतिविधि को और मजबूत बनाते हुए वैश्विक परिवेश का अधिकतम लाभ भारत को मिले। हमारी सरकार की पहचान दलित हो, पीड़ित हो, शोषित हो, वंचित हो, महिलाएं हो, इनको एम्पावर करने की रही है। इस दशक में भी हमारा उन्हीं दिशा में बल रहेगा और मैं चाहता हूं कि दोनों सदन में आर्थिक विषयों पर, एम्पावरमेंट ऑफ पीपल के ऊपर बहुत व्यापक चर्चा हो, अधिक अच्छी चर्चा हो। दिनों दिन हमारा चर्चा का स्तर अधिक समृद्ध होता चले, इस पूरे विश्वास के साथ मैं आप सबका भी बहुत बहुत धन्यवाद करता हूं। नमस्कार।
All right, that's Prime Minister Narendra Modi addressing the media ahead of the budget session, and we're pinning a lot of hopes, in fact, on the budget beat with regard to what comes out to revive the economic growth, or for that matter, to spur consumption as well. But having said that, let's wrap this show and get some closing thoughts going from Amit. What key levels do you monitor for tomorrow? It's a big day. Any tactical trade that you want to share with our viewers?
Sure. So till the time Nifty is below 12,200, 12,250 odd mark, I would be on the negative side of the market, where I would deploy a shorting a future trade and to hedge that position, to buy a call option of 12,000 strike weekly call option, where the premium is hovering around 170 odd. So that will take care of the stop loss level of 12,200 odd. So in my view, if the more time it spends below the 12,000 mark, it is soon likely to hover towards the key support of 11,800. So that would be my trade. It is important the open interest should build up from here on, which is around 1 crore 8 lakh shares. If the trend is on the negative side, the open interest can be seen, the fresh shorts which can be added to the February contract.
If in case there are a lot of surprises, would you concur there is a lot of room for short covering, considering how the FIs have gone into their completely net short on the index
No,
futures?
with that base of 1 crore 8 lakh shares, I don't see there can be a massive short covering. There are multiple resistances on the upside, so I don't see open interest getting played out on the short covering side.
Okay, fair enough. Well, we have reached the end of this show. So, Amit, thank you so much for joining us and taking us through the very crucial rollover data ahead of a very important yearly and annual event as well. But don't forget to go through our futures and options pages on BloombergQuint.com.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to Bloomberg Quint for more news and updates.
City Union Bank introduces multilingual conversational chatbot Kab Lakshmi, first time in India. You can ask for your account balance, do fund transfers, and to know any other bank